Alright, what's good, everybody? Let's jump into it. Right now, gold's in this tight range. It's trending downwards. Not any opportunities yet. Are we looking for longs? If price can make it into this FVG down here. The dollar is finding some rejection from this 1 hour power 3 pattern. Signature pattern, whatever you want to call it. Gold is rejecting from this 90-minute inversion. What I want to do is get into the indices, do a quick top-down analysis on this, starting from the monthly. I did not do this. So jump into my journal. Right now I see a bullish continuation. Price has mitigated from a monthly order block, drawing, and it's drawing towards all-time highs. Weekly is in a bullish expansion, has mitigated from a weekly logical area, drawing towards previous week high plus equal highs. This down to the daily. So we have delivered the FEG. Looks to be drawing higher. Daily looks to be a bullish correction expansion. Has redelivered daily FEG. Drawing towards the weekly liquidity. On the counter trend side though, price is redelivering volume imbalance. Back to the charts. We'll go a little lower, 12 hour. range right here. Until we break out. This is kind of the range we're in. So we are in a like bullish, kind of like consolidation. Range. Price is higher. On the counter trend side, price is redelivering from 12-hour IFEG plus a previous month. From extreme. So we're in like a bullish range. Price has redelivered. There's 12-hour higher, but we are in the process of redelivering from a 12-hour inversion fair value gap plus the previous month at the extreme high of this range, right? So that we can find some resistance here. It's a Friday. We might not go higher. We might go higher. I don't know. Need to go lower. Volume imbalance here. So potential to see something like this. Potentially. Sort of like in a bullish expansion. Has redelivered 6-hour higher. trend, we are rejecting from the previous month. Plus volume imbalance below. So, right? Bullish expansion. Drawn liquidity is 6-hour inversion plus the previous week. On the counter trend side, we are rejecting from this previous month in the volume imbalance below. That's it. Let's go lower. Next to 3-hour. Volume imbalance. I'll check that in a second. I don't need this on this time frame anymore. Have that beautiful mitigation of the 6-hour. Excuse me. That would be a 3-hour. Which is a double mitigation. Which, if price comes back into it, probably will not hold. Double mitigations on and strong. And triple mitigations, if price were to come down here for the third time, definitely expect it to be ran. I don't really care about these. This can kind of just go don't care about those at the moment. This counter trend. Counter trend. Should be, if it's not mitigated, I like to make it white. Counter trend signature pattern. 6-hour version plus the 3-hour right there. We are looking like a bullish expansion. Price is same analysis as above. 6-hour. Pretty much the same. Nothing really different here. Let's go lower. Let's get lower. Go down to 90-minute. You can see right here we have this volume imbalance that was rebalanced about halfway. What is this? Was that rebalanced? Yep. 90-minute. Let's break retest level here. pool. Same as here. A lot of opinions built up in these areas, so you can expect a lot of manipulation. Relative equal highs. Minute looks to be bullish. Oh, whoa, whoa. Looks to be like a bullish expansion, maybe extended. Just a 6 hour high VG, but multiple test liquidity pools. Left below. So if it's gonna go higher, it probably needs to go higher now, because what I'm trying to say is if it wants to go higher, it should go higher now to tag that, because there's so much liquidity below that if price when price does come, it should just run through all of this. So I'm gonna go lower one more time. So hourly. Change that so you can see that this turn that was mitigated. That was rebalanced. Not looking the best. I don't really know where. So you have that redelivery mitigation of the route. So these areas, if price returns, it probably shouldn't go back. Alright. Kind of looks like a bullish. Extended, that's what it looks like. Looks like it's going to reverse. Looks like it may be rejecting into potential bearish reversal. And that's that. So how might we? I think I need to sit on my hands for further price action. Dig into lower time frames. I think that's just it. Wait for further price action. Because what I'm seeing right now It's a lot of liquidity built up. It's a lot of liquidity built up. I'm unsure of how or when the 6 hour will be delivered. If I stick to my trading plan, I will not fail. What are the drawbacks? Are no drawbacks to sitting on my hands and practicing perfect patience. So that's done. That's done. Now we just go to the charts. We have an idea of what to expect, and we just analyze. I had an alert set on gold that I believe went off, so let's see what's going on over there. Gold right now is rejecting from the previous day. Tight little range. This goes, the dollar, dollar's rejecting. Maybe, let's see how gold's reacting. Gold is getting a push higher. Respecting this fair value gap. All-time highs were made yesterday. Big push yesterday. So we definitely are extended, but that does not mean that gold does not want to continue higher. So I would not have taken this trade regardless because of these relative equal lows that are below. Well, you can see that there are all this is buy side liquidity. You have people who are selling this rejection based off of what I just said, that gold was at reach all-time highs yesterday. So you have people trying to play off of this rejection candle, trying to sell. Stop loss orders are above the swing highs, right? The lower highs, and that's where their stop losses are. So that acts as a draw on liquidity for anyone who is long, because we know that people who are shorting. Stop losses are here. If your stop loss gets hit, then your order gets reversed. So sellers, they turn into longs, and that gives a chance for either more sellers to come in above these levels, or if there aren't enough sellers and more buyers can step in, will continue to bring price higher. Also want to come here and recognize that this is all-time high. So we're gonna actually put that right there. Make that a little brighter. So right now, I don't have any opportunities in the marketplace. All I'm able to identify are threats. Because there are more threats than there are opportunities, this is a no trade situation. And it's okay. Being able to identify places in the market where you shouldn't be entering is just as important as finding entries, right? Now, what I used to do, and I'm sure a lot of you probably do now, is just say, well, I don't know what the hell I'm looking at. So I'm going to go follow other YouTube streamers. I'm going to go see what other people are doing and maybe try to hop on their coattails. But that isn't helping you. That isn't helping your mental state. That isn't helping your strategy. You have to have conviction. You must show conviction. And with conviction comes hope. And having hope is understanding what is going on and believing and trusting in the process, trusting in your analysis. I trust in my analysis. I trust in my process. That's because I've back tested. I've journaled for over close to a year now. All of my trades, hundreds and hundreds of trades. I know what to expect. I know how long I expect to be in the trade after entry based on the time frame that I'm trading on. I know the times that I like to get in. I know the pattern formations I like to see. This is all done through journaling, through experimenting, but sticking to one strategy and testing its edge to the fullest possibility. I'm just ranting and rambling right now, but that's just how I feel. So pretty much we just sit and we wait. Boring, right? That's trading. You want to eliminate all the euphoria, all the despair. You want to do your best to get rid of those emotions. Or you just chill. This is just still slowly pumping higher. Let's see if maybe we'll find something in this. I'll actually go to a lower time frame and see if I can find a way in. Again, there's too much threat. There's way too much threat in the marketplace with all this liquidity built up on both sides that yes, we are redelivering of this reclaimed fair value gap, and yeah, there's relative equal highs. Yeah, we had the 6-hour draw on liquidity, but it's not something that I would like to trade, right? This is based on my experience in the markets and what my eyes can see. Every trader, regardless if we're trading the same strategy, identify different things. We have different strengths and weaknesses. And you have to figure that out on your own, what that is. And that's through hard work. It's not easy. That's just through failing until you succeed. And when the whole time you're failing, you're taking screenshots, you're journaling, seeing how you can improve, right? When you're winning, you're journaling. Break even, you're journaling. And when I say journaling, that means screenshot and writing up annotations and stuff like I'm doing here. You know what I'm saying? I actually want to get rid of this. And that's what you need to do. If you don't have a spreadsheet or you don't have something, a process, hit me up. I'm willing to share that for free. Like I said, I'm not a guru. I'm not a mentor. I'm not trying to sell you on anything. I want people to succeed. I don't believe there's one strategy that is the best strategy out there. Sure, there are some, like my strategy, I feel like it's the best for me. That's because this is my strategy, right? You can have your own strategy, and that is the best for you, right? But what really matters is your risk management, your discipline, how you execute the strategy, right? And that can apply to trend lines. You support resistance trader, right? You can read the tape. ICT, right? You just have to have a process and you have to follow it, and you have to have the data to back that up, and understand that you don't know what any individual trade will be. You can't predict that. You have a percentage and a probability of your win-loss percentage, but you don't know what each individual trade will be. You could have 5 losses in a row followed by winners, right? Now, what's your risk management for those 5 losses? Will you blow your whole account for the first 5 losses and not able to even see your true probability percentage play out? That's why you have to have strict risk, so you can see yourself through like the gauntlet, right? because you don't know. Now you could start out with just a winning streak, and now you're comfortable. Now you have the buffer. Now you're playing with good risk management because you're comfortable, right? Be comfortable being uncomfortable, right? So if I hit losses, I'm okay with it because I know my risk is in place where I'm able to I can handle those losses, knowing that the winners are coming. You know, they will come, and I will grow my account. That's just how it gotta be. So we're stuck inside a huge new week opening gap, but you can see this is the December 15th new week opening gap that price is re-delivering from right now. So that would make that a little bit better of a trade to try to get into, just because of that. This is technically a bypass pattern. This is something I learned through this guy Danny Rand, EFX guy. Great trader, great mentor. He actually stopped doing that and now just runs an algo. Sucks, but it is what it is. I think he still has his videos up on YouTube. But yeah, so you see you have resistance support with a nice engulfing flame pattern here, tapped with the volume imbalance. I mean the inversion fair value gap. I probably would have traded this. Only reason I would have traded this now, I said I wouldn't have before. I just based on a new week opening gap, but still I probably wouldn't. To be real with you, I wouldn't. This is just tape reading. I wouldn't have traded it. Yep, happened right within New York. Yeah. So this is when the SMT confluences are not aligned. You have the dollar going up and gold going up. That happens sometimes. It's another threat, right? I like these two to be aligned. Doesn't always happen, but when it does, it helps me. I didn't even have my top step open. Oh wow, there was bunch of red folder news. Oh, see, I started a little late today. I just started a little bit late, but there was core PCE news today, 8:30 a.m. Forecast came in a little worse than expected. Sorry, that was the consumer spending. It actually came in better. We were looking at a 0.5% forecast. We are at a looking at about 0.75%. So the economy is spending a little bit more, which is good. Good for the dollar. Any other news? That's pretty much it. No more news. See, we're gonna bounce around. We're stuck in this tight little range right here. I want no part of it. I want no part of any of this at all. None of it. Don't want it. Right? Sell side, buy side, both available. I would like to see maybe price manipulate, put in a manipulation candle, try to get in off of that, or I like to see price redeliver the 6 hour, same thing, put in a manipulation candle, get in off of that. Until then, I am sitting on my hands, straight up. Gold, similar situation. It's like we're in this tight little downtrend range, kind of like a consolidated range. Not really feeling it. Not feeling it. Equals below, sell side available, buy side available. So if I were gonna trade this, I would want to do this. And honestly, I might have found a way in to a counter trend trade, which is pretty dangerous because this thing's going to the moon at the moment. I'm actually going to take this, drag that to there. We might be able to see something based off of this with all of this kind of built up. I'll just take that to there. It's a counter trend trade. I mean, it's not the best trade to be getting into. Still above the EMA. Way above the EMA on the higher time frame. So we are extended on the higher time frames. Alright? We are extended. All-time highs were created. We were still up the previous day, built in this engulfing pattern. Left this liquidity above where price may want to absorb. Buyers come into the market, then big time sellers step in, use that liquidity to push price lower. We can see that. We can also see this thing just still go higher. But if the dollar is going higher, eventually you have the power of three pattern, accumulation, manipulation, and here's your distribution. If we can get the dollar to go higher, attacking the previous day high up here, eventually you would want to see gold fall. So you know what? I think I actually might. Why not? Yeah, we'll try to get into that. We'll try to do that. tough. It's tough, but I think it's worth it. It is worth it. So I'm gonna put one micro on my XFA. We're going to risk just around $50. Commit, paste, sell, confirm. We're gonna come over here and we will risk 3 on my combines. Counter trend, do not want full risk, so confirm sell and confirm sell. Great. So as you can see, I have sell limits on all 3, and we will wait. I'm also going to put in 8587. I'm going to put in 8587. Should be a stop buy. Beautiful. And now we wait. Wait and see. Let's check out what the new week opening gap looks like on gold. There's nothing because we're so extended. Okay, I'm the dollar. If price fall below this level, if it creates a new low, a lower low, I will either exit out of the trade if I'm tapped in, or I will not even. I'm going to delete every pending I have. That's how much I ride on the correlation between the two. Alright? We're having a little rejection after an absorption of the buy side liquidity. Right? Little wick test. We're going to sit here and we're going to wait it out. I'm actually going to. This is extra confluence here is in the fact when you have an inversion fair value gap that overlaps a fair value gap, right? That's good. Confluence. Right? Now I could take that, but what does that do? I would be greedy. Just take it off of that, right? It's 2 ticks. That's $2 on 1 micro, right? That's either I risk 54 or 52. Imagine if I say, okay, I'm going to go for the inversion fair value gap. This shit only taps the fair value gap and leaves it out with me because I was trying to be greedy over 2 ticks. No. Been there. Done that. Not happening again. Once again, I don't care. I don't get tapped in. I'm not upset. Don't care. If this shit just runs through my order, don't care, right? I understand the threats. I understand this is what? Counter trend. It's going against the higher time frame trend, right? We're super bullish. Yesterday was crazy bullish, but because of that crazy bullishness, we are overextended, right? I can see that there's an absorption of the previous day high followed by an engulfing flame pattern lower, right? Beautiful. We have an hourly fair value gap that is right below here. So if I come right here, right, which can act as a draw on liquidity, right, this is turning into like a, at the same time, look at this. This is already redelivered. Like, I have a little bit of buffer that I made this week, but if this is like my first trade of the week, of a new month, I'm not taking this trade because I have a little bit buffer built into my account. I'm comfortable taking it. That's it. That's the only reason why. Because high time frame perspective is not all the way on my side. It's like, well, how do you know that? It's because I journal. I take screenshots. I collect a lot of data. I've done this over months and months and months. And at first it was so tedious and it was miserable. Miserable. But you know what's more miserable? Repeating the same exact mistakes day in and day out. Expecting different results. What is that? The definition of insanity. Huh? Albert Einstein. Guy was pretty smart, wasn't he? You know what I'm talking about. Like, you shouldn't do something and you still do it, right? And then after you do it, do you break down what you do? Nah. Push it off, right? Push it off. Go chill. Go drink some coffee. Go smoke a joint. Go smoke a blunt. Go for a run, right? Cool, that's all cool, but you also have to take accountability for your actions, and it took me years to take accountability for what I'm doing here on the charts. Now I can have accountability for the rest of my life, not the rest of my life, but my outside life, right? Clean house, laundry's always done, right? Fresh cut, fresh clothes. When you get on the charts, it's not the same. It's something about the charts, man, that it brings out the worst out of you. It's like you have to conquer all the worst parts of yourself in this trading game. It's crazy. Crazy, 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 crazy. That's why I truly don't believe the strategy is like, obviously you need a strategy that's profitable, right? But if you find a strategy that is profitable, that you've seen with your own eyes, don't trust what I'm saying, don't trust what ICT is saying, don't trust what Trade by Map saying, don't trust what Tanya is saying, don't trust what Dakota is saying, don't trust what Rip's saying, don't trust what Patrick Weiland's saying. Hear what they're saying, and if you fuck with any of the individuals that then go and take their information, apply it yourself, and see if it works with your own eyes. And if it does, then stick to it, right? That's it. That's it. And the rest is just working on you, working on yourself, which is miserable, tough. It's tough. It's the toughest part of this. Cool. Gold just took, gold. Dollar. Making some new lower time frame highs. Change that. This is now absorbed. So we want so here is our next draw on liquidity. Draw on liquidity it just means that's the next place we expect price to go to. Feel me? Ooh, oh! Get rid of that magnet. Alright, bet. Cool. continuation of the 6 hour, pushing higher. Way too many. I need the hourly one. My computer's lagging. I gotta export. I've been practicing recording my trades before. This is my first live stream ever. So I just been recording myself over the past few weeks, probably even a month now. And I got them all saved on my computer. They're piled up, hours and hours. I probably have like a sliver of memory left. So this might just be all lagging like that, and I don't even know about it. So I'll find out when it's done. Hopefully not. At least I don't have my mic muted. Been there. Recorded the whole video with my mic muted. So that's good. That's a plus. That's good. I kind of don't want to see this on this time frame either. It's too cluttered. Let's get rid of that. Cool. Cool. Alright, so price redelivered this fair value gap, right? We don't want it to close through. As of now, it's still respecting. And as of now, this is still in play, right? The minute that this gets ran, more than likely it will run this. And if this gets ran, this completely invalidates this setup for me for the day. I'm going to set an alarm on this. If that gets ran, I want to know. Right? Alright, have alarm set on that. Let's come look at this. Look at this. What was I saying earlier? There's a lot of threats in the marketplace right now. And just because a pattern looks great, if there's a lot of stuff surrounding it, you got to take it into context. This liquidity pool, right? These break retest liquidity pools below. The tight range that it's in. Right? All the things I said previously that I'm not even remembering right now in my mind, because I'm focused on that gold trade. It's just why I'm not trading MES right now. Just for me, for my eyes, it's not it. Back in the day, I'd take that trade, like, yeah, who cares, right? But nah, I'm not doing that anymore because I've taken these types of trades before in the past and realized that the success rate isn't that good. You know what I'm saying? And the risk reward that I'm trying to get doesn't make sense. I will ruin my account, right? If I risk, I will ruin taking trades like this. No thank you. So we just let this do what it does. Set an alert. Cool. Let's set an alert. Let's set a alert on this as well. Here's your buy side, sell side, whatever gets ran. That's all I care about. But truthfully, I'm not trading this. Now, if MES would have, S&P would have ran buy side and then did a strong impulsive move lower, I'd be looking for shorts. For like a short-term rejection reversal trade. But it's not there. There's no trade. I'll put big fucking fat letters. No trade. Done. No trade. Don't do it. Big red. No trade. See you later. I'm not even looking at NNQ. So normally, I woke up late today. Normally I would do the top down like I showed you guys earlier on both of these. And I would do some SMT. I'd use those both in confluence with each other's, right? because they have a positive correlation, meaning they move in tandem with each other normally, right? So that can help you. So the dollar and gold have an inverse relation. They are negatively correlated, meaning when the dollar moves up, you can expect the gold to move down, vice versa. If the dollar is moving down, you can expect gold to move up. So they are negatively correlated, right? S&P and NASDAQ positively correlated. They move together in tandem. When one goes up, expect the other to go up. When one goes down, expect the other go down. But that's not 100%. It's not a be all end all. But train your eyes enough, document, screenshot, you can identify when they are in tandem with each other, and they do help, right? And also understand that when they're not, that is a threat, right? You have opportunities and threats, right? Something called a SWOT analysis, okay? And it's used to identify strengths, weaknesses, opportunities, and threats. SWOT analysis. This is something that businesses use to run their companies. I found a way to kind of flip it a little bit and use the same type of mindset and apply it to my trading, right? My strengths. What am I good at? What patterns, recognition am I good at, right? So like a reversal trade, I'm pretty good at these, right? What weaknesses do I have? Shit like this. When we're in a tight ass range, mad liquidity built around, all around it, right? That's a weakness to my strategy, right? Now, knowing that my weaknesses, if I'm able to identify them beforehand, are my threats, right? So I identify that this is kind of like low probability of working out, threat, right? Break, retest liquidity pools, threat. Liquidity trend line, threat, right? Okay, what's the opportunity? Well, you have the equals above. For going, that's it. So I have one opportunity in equals, but I have this pattern, bypass pattern, but what? How many threats do I have? I have 1, 2, 3 threats to 2 opportunities. Cancels it out. More threats than opportunities, no trade. This, what do I have? I have a clean fair value gap. I have buy side right here, where we know that how the auction process works, where sellers need longs to push price lower, right? So that where the longs gonna come in, especially for a reversal, right? We're trying to reverse the trend here, so you're gonna need a lot of momentum, right? Where is that gonna come from? Where are those orders gonna come from? Where they can accumulate and spot money can come in and push price lower? Well, it'll probably be above these highs, right? People shorting with stop losses, they get stopped out, get liquidated into longs, and then sellers come in, accumulate all the longs, and there's no more people buying, and it will bring price lower, where there are more buyers willing to buy from, right? So that's opportunity, right? There's more opportunity than there are threats, even though it's a counter trend trade, right? That's why I'm comfortable with that. SWOT analysis, SWOT, strength, weakness, opportunity, and threats. I have papers on that too, from way back that I made, or wherever they came from. Not sure, don't remember. But like I said, whatever you guys want, if you're interested in that, holla at me. Shoot me a DM, leave a comment. I'm willing to share. I don't care. I want to give. But I'm not teaching no strategy. Ever. I'll play around if you, like, I'm not a teacher of strategies. Like, I can't teach what I'm seeing. There's so many good people out there who put this information out on the internet for free on how to trade. What they leave out, though, is the stuff I'm talking about, like the mentality that you need to trade, right? That's important. So, like, that's what I'm talking about. So you want to come and chill and vibe with me? Let's talk shop that way. Don't talk shop about, hey, how do you trade? How do you trade? How do you trade? I'm not that guy. I'm down to talk with you about, yo, what are you risking? Like, what are you shooting for, right? What do you see? Where do you see where price can go to? Where do you see where if price went to you wouldn't want to be? Stuff like that. And then from that we could build frameworks around your strategy. You know what I'm saying? But it has to be your individual strategy. It has to be something you picked up along the way, something that you've backtracked, something that you've tried, something that you have conviction in and confidence in. I can't give you that. Nor do I want to. Oh, I didn't even realize. Look at this. So, this fair value gap is still holding up as well. Yeah, I need to clean my computer out. It is slow as ever. What do we have? We have 4 minutes to 9:30 a.m. Eastern time. That is indice open. Maybe we'll get some trades on indices. Maybe we'll see some manipulation later in today. So the 90-minute, when I say invalid, I was talking about as is. Alright, we're trending higher again. Gold absorbed buy side and looks to be coming lower. Because it's coming lower, price is shooting higher, right? 9/11. Like, you know. Relative equal lows created. Wonderful. So the pink one is the new week opening gap for this week, and I don't want to see that because it's so huge. It's huge. So I get rid of that. You can see, right? I identified this range earlier in the day, and what are we doing? We have been ranging. Once again, if price would have manipulated before this impulsive bullish price action, I might be looking for longs, but probably not because of that break retest liquidity pool on the higher time frame. A lot of liquidity beneath this low, but there's no trade. There's no trade on the indices for me right now. This is all I'm looking at. The truth is, I might be wrong, right? Well, the trade here might have been just to go long from here, right? It was just to see, identify that we're redelivering of this fair value gap, pushing higher. But there's no market shift. I needed a market shift to take that trade. Was there a market shift on the lower time frame? No, there wasn't. What about here? Yeah, there was. There was a market shift right here. So this would have been okay trade, but once again, I do not like. I just don't like when it leaves equals like that. It's just something I'd rather stay out of. I've seen it time and time again. Just run these. It will just run these. But this potentially could have been a short little scalp, right? It probably would have been like a 1 to 2. Yeah. Now if I would have took it based on just that, which I probably wouldn't have done a tight stop like that, you know, it's right around a 1 to 2. So that potentially could have been a decent trade. But I would not take this trade, even with the buffer, because of those equals right here. These 2 wicks. See? Perfect equal lows. Not a fan of that. It's just not my game. Yeah, I need to fix this because it is running slow, and I hope this doesn't affect my charts. That's pretty much ran. I don't care about that. Ooh. So the first buy side has been ran. Sellers tried stepping in, but clearly that's not where they want to get in at. And now we're pushing price higher. Buyers are able to absorb enough of the shorts that came in. After this, I was absorbed. Price higher. Remember, counter trend trade, very risky. Very, very risky trade here. Do not recommend ever taking counter trend trades. But I have a buffer built. I had a decent week. So I am okay taking this trade. Oh, almost there. Just absorbed buy side again. Need a little bit more of a push higher. Will be tapped in, and that's it. I do not know what will happen after I am entered into the market. No one does. All I am here to do is practice perfect patience and perfect execution. That's it. I have to execute on my strategy. That's all I am in control of. That's it. Trade management is basically just identifying where I want my stop loss and where I want my take profits to be. I don't really want to do too much in between that. Alright, so look, stop loss is above that high here. Turned into shorts. Turned into longs where the shorts can absorb and try to push price lower. I think we want to go a little bit higher first. wait and see. Wait and see. Just check my YouTube and it is not working. I'm gonna make a coffee. I'll be back.